Joining us this morning is Enro Mendoza, the Vice President of Strategy and Business Transformation of Rampver Financials. Good to have you back on, Enro. Welcome to the program.
Good morning, Miss Kathy. It's good to be back.
All right, so you've heard TG there, TG Limcauco of BPI. What stood out from what he said, from your perspective?
Yeah, I think as one of the leaders in the Philippine economy and especially in the banking industry, it's very nice that he's very strategic. We see the established businesses, companies really making sure that their strategies from the years past, they're able to do more. So in terms of their policies, in terms of their business models, they're actually investing in technology, making sure that we're relevant in the years to come. So looking into the economy as a whole, these are the companies that, our traditional names, BPI, and all of our other known names as well, Meralco investing in the future, making sure that their businesses stay relevant.
The thing is, it's doing more in a slowing economy, and I'm wondering from your perspective as somebody who manages money, and a lot of the millennials and the young, how do you do that? Get the biggest bang out of the buck?
Yeah, I think it's a very different conversation than what we had last year, wherein the global funds, global companies really led the charge in terms of AI and technology, and we see that especially in the US, it kind of slowed down. So fund managers are looking into Asia, especially the Philippines also. So the past months, we've been looking at a net positive foreign buying. So they're looking at first, of course, our known names, right? Our BPIs, our ICTs, our Meralcos, and especially here in our Philippine economy, we see that the fund managers prioritize the infrastructure companies.
Yeah, let's take a step back and dive into that, because when you gave us your chart, it was really surprising that your top performing fund for the whole of 2025, and let's just pull that up, happens to be an infrastructure fund.
Yeah.
And it happens at a time that we had a lot of problems with the corruption scandal, public spending slowed, along with private construction. But guess what? You did what? 12.7%.
Yeah, actually, this
12.5% of a growth.
This is year to date, 2026.
Year to date, and benchmark up against what is it? PSEI?
I believe BPI would have their own internal index for infrastructure, but then usually what barometer we use for the local funds would be the PSEI.
Right. Well,
So,
how did you figure that out? When everybody was staying away from infrastructure, that's where you put a lot of the money.
yeah, I think we see that because of, I guess, what's happening in the US, what's happening globally. Fund managers are a bit more strategic. They want to diversify, so they're looking at emerging markets like the Philippines, and also in Asia, we see that the Asian markets are doing well so far in 2026.
Right, but that narrative kind of is put into question with the second best performing fund because it's involved in, I believe, the SDGs. If we take a look, and push back, take a look at the next chart, because it's interesting that the biggest net returns there happens to be in SDG. Is that correct?
Yeah,
And it happens at a time when there's a lot of pushback from America.
yeah, this one is Atram Global Technology. So we see that in 2025, that was really the narrative. We're looking at the Magnificent Seven, the Amazons, the Metas, the Nvidias, really leading the charge because of industries that are not present in the Philippines. So we advise our clients to diversify, still look into the Philippines, of course, because we want to bring in more volume and investment in our local economy. But now we're in a good place because, yes, they're diversified, they are in global funds, but we're now looking, hopefully, at a recovery year for the Philippines and really have the foreign net buying back in our local economy.
Well, correct me if I'm wrong. I'm looking at the first chart here. The SDGs are no longer here. I mean, did you change that last minute? I mean, is SGG represented as one of your top performing funds?
Yeah, I think that was Feb 9, and then we updated it as of Feb 10. It's now the indexes and also the MSCI. So what this shows us is it's not just the large caps leading the charge, it's also the mid to large caps, which is around 85%.
Okay, so what I'm seeing here is, correct me if I'm wrong, the time to look at the Philippines is now.
Yes.
The focus is really the valuations because it's cheap.
Yes.
But what have you got to back that up with?
Yeah,
with
I
the
think
ramp up, the catch up still happening, and the governor himself saying that recovery will happen in the latter part of this year.
Yeah, I think what we advise our clients is really have a long-term vision. Now that they're diversified in the global funds and also in the local funds, asset allocation is really key. And asset allocation is, the best strategy in the long term. It's the most successful investment strategy. So, yeah, be patient. Look into the index, and also as another secondary strategy, look into dividend-paying funds so that while you're waiting, you're actually rewarded by the dividends of these healthy companies.
Okay, so how do you see this changing then for maybe the second half of the year? What's it going to look like? If somebody were to come to you and say, draw me up a portfolio, is it going to be a little bit more different than what we have now, or similar?
I think on the global side, it will be interesting because it's an efficient market. So we see that hopefully right now it's relatively flat as of February, but in the next few months, let's see how that will ramp up as well, because technology is still the hot thing right now. And yeah, a lot of these companies are investing a lot, like your Amazon would be investing heavily in their AI infrastructure. On the local side, yes, it's still be patient. We're not saying that we will arrive an all-time high in the near future, but we advise our clients to really look into asset allocation, like which investments are they putting in their money. And we see that from our fund managers last year, it didn't perform as well as our US funds, but they were also on the positive while the PSEI was on the negative. So imagine if it were a better market, those fund managers would have a relatively easier time to outbeat the pace of the PSEI.
Final point, asset allocation, is it stocks over bonds or equally weighted for both?
Usually it's a rule of 100 we advise our clients. So the rule of 100 is 100 minus your age should actually be the allocation into growth assets, like your stocks, your equity funds, and such, while the remainder would be on your conservative positions, which is your fixed income, your bonds, corporate, and government. So that as you age, as you move towards your retirement, there is still room for growth, but then you're more conservative because, of course, you want to ensure that your retirement fund is intact.
You got me there with the age. I got to do my computations after the show. Thank you so much.
Thank you so much, Ms.
Appreciate the
Kathy.
time, Enro.
Thank you very much.
Enro Mendoza of Rampver Financials.